Hi, this is Romeo Caparasta from taxaccountingadelaide.com. This month I'm just going to cover about self-managed super funds and what you can do instead of just having a normal superannuation account, and the reasons why you need to know about self-managed super funds. Okay, I'm going to give you some general information, so don't completely rely on what I say. You may need to seek advice on your individual circumstances. So let's start with where most of you would have super. Most of us, before we've heard of self-managed super fund, we just have normal superannuation account. So we're generally employees and we're being paid super by our employers, and it's put into what's called a retail or industry fund, and that's typically invested in financial assets, which includes cash, so term deposits, basically fixed interest amounts. It could be shares, local or overseas, and you dictate the risk profile of that investment. When you initially sign up for the superannuation fund, you'll typically pay an investor management fee, and you may have some personal insurances attached to that. So let's go with why would you have a self-managed super fund, which I'm going to call SMSF. So one of the great things you can do is obviously pool funds together so all your superannuations within, say, your family, so you and your spouses, or additionally some other family members. So you've got a bigger amount that you can invest in, say like a property. You can buy a property with that amount once you pool those funds together. You've got more investment options than obviously a normal retail superannuation fund, which I was explaining earlier. So you more options than just diversified financial investments. So you can invest in, for instance, direct shares, direct property, maybe a share in a commercial property. You can lend funds at a higher interest rate than banks, for instance. You can do different things depending on your investment profile, how much risk you want to take. There can be no investment management fees, so instead of you paying your superannuation industry fund management fees, you'll have setup and admin accounting fees. I think that running your self-managed super fund is much more fun and more interesting environment to create wealth for your retirement. I kind of think of it as a big piggy bank, and which you can't touch until you retire. But when it's just a super fund and an industry fund, I don't think people get that excited about it. But when you're dictating how you're investing your money directly in your self-managed super fund, it can be a lot more fun, and people can actually do a lot better with it because of that fact. Of course, self-managed super fund is a fantastic entity vehicle in which you can create income and capital gains, and it's still taxed at a low tax rate of only 15%. It's also great for self-employed people who can contribute and get a tax deduction for their contributions to their self-managed super funds, which is fantastic. So obviously the only downside is it's locked away until you retire, but you can actually put your money in, if you're self-employed, into your self-managed super fund and get a tax deduction for it. So that's a win-win situation. You're investing in your retirement and also getting a tax deduction for you. So that's a fantastic advantage of a self-managed super fund. So let's go through the process of what's involved in your setting up a self-managed super fund. The first step is you need typically a lawyer or someone to create your self-managed super fund trust. Then you need to choose members, so you can have members and trustees. So you can either have at least 2 individuals or up to 4, or you can have a company trustee. So there might be a setup cost. I think typically that's probably around $1,000 to set up your trust, and maybe a corporate trustee can be a little bit cheaper if you've got individual trustees. You also get a tax file number and ABN number if necessary, and notify the ATO that you're commencing a self-managed super fund. You then open up a bank account in the name of the self-managed super fund. You then roll over your super funds from your other superannuation accounts into your self-managed super fund of all the members within the self-managed super fund. Then you decide where to invest and have an investment strategy, which so typically you're going to make up your mind, okay, I'm going to buy a property, or I'm going to invest directly in shares, for instance. So if you're going to start share trading directly, you'll typically open up a share trading account in the name of the self-managed super fund as well. You'll also want to consider review your personal insurances. If you've previously had a super fund that was covering that, you'll have to consider that in running your self-managed super fund. You'll also have to keep your self-managed super funds separate from your private funds, so you don't mix up, so you don't pull money out of your super and put it into your private funds. That's a big no-no. You don't forget that you can't access these funds until you retire, so you've got to make sure you don't put too much money into your super, because obviously you can't pull that money out until you retire unless there's strict circumstances in which you can do so, like if you're leaving the country or really in financial hardship, etc., or you retire. So yeah, don't, obviously keep good liquidity outside of your self-managed super fund. You need some money for the rainy day. Don't overcommit and putting too much money into it. And you also need to do a yearly self-managed super fund tax return, and that needs to be audited every year because it's highly scrutinised by the tax office, so it insists on a audit every year, which makes sure that you've got to follow all the rules, and you've got to keep all your invoices and documents. It's not like your typical individual tax return where you don't have to show your accountant or the tax office every year your invoices. In self-managed super fund environment, you need to keep all your receipts and show them to your accountant at the end of the year, and your auditor needs to see those as well. So again, what are the advantages of a self-managed super fund? Obviously the major one is it's a low tax environment, so only 15% tax before you retire on your income and capital gains. So if you sell a property before you retire, only 15% capital gains tax rate, which is fantastic. And your tax rate is 0 when you retire, so on income and capital gains. So if you accumulate property holdings and have substantial capital gains, this is the place you want to do it in a self-managed super fund, because once you retire, it'll be taxed at 0 despite no matter how big your capital gains are. And that's where the big advantages can be of a self-managed super fund. It's also great for self-employed persons because they're able to contribute and get a tax deduction for the contributions to their self-managed super fund. There are some limits that apply. Some of the disadvantages or cons to it are probably that there's strict rules to follow. There's certain things you can and can't do, and you need to be aware of those with maybe your tax advisors or financial planners. You'll have an annual tax return to do, and you must keep all documents, as I just previously mentioned. Now don't forget that super in general is like a piggy bank, and you can't open it until you retire. So putting if you invest in your retirement through your self-managed super fund, you can't actually feel and spend the money of this benefit until you retire. So you want to obviously keep some wealth and liquidity outside of your super as well. It can also be difficult to borrow in a self-managed super fund, so it may be good to borrow 1 or 2 properties still in your individual name, because that can give you some negative gearing benefits as well. And yeah, maybe one other con is maybe that there's an uncertain future in self-managed super fund tax laws, but that's like everything, with the current economic climate, that the government is obviously talking about tax reforms, and they may sweep across all sorts of areas of our tax laws at the moment, including our self-managed super fund tax, concessional tax rates, so keep that in mind as well. But I don't think they can completely overhaul it, because obviously it's great for the economy to have self-funded retirees through self-managed super funds. I'm just going to run through a couple of quick examples of a couple of different people and how much self-managed super fund can help you and not help you if you're not aware of it. So Giuseppe is done really well. He owns 10 properties, and he owns them all in his individual name, and he's now 70 and his taxable income is 100,000. Now unfortunately for Giuseppe, that's fantastic accumulation of wealth, but he's still going to have to pay a substantial amount of tax every year, and do his individual tax return. So he's got a bit of an unhappy face there. Maria instead has got two properties in her name, and she owns another 8 in her self-managed super fund. And at 70, her taxable income individually is only $18,000. She pays no income tax in her individual tax return because she's under the tax-free threshold, and she also pays no tax in her self-managed super fund as her tax rate is 0. So, obviously Maria is well structured. She's accumulated her wealth in a low tax environment, and she's smiling. So, which one obviously would you like to be? Obviously you'd like to be Maria. Okay, well that includes our little information session on self-managed super funds. Remember that tax accounting can be your tax agent if you are looking to establish a self-managed super fund, and we can also have a complimentary session with you to see if self-managed super fund is right in your particular circumstance. And we've also got a financial planner to assist you getting the right investment advice and personal insurances associated with your self-managed super fund. Please don't hesitate to call us on 8337 4460 or visit our website to book in an appointment. We do have financial planning complimentary sessions, and also we're having info nights on self-managed super funds as well, so look out for those. Or of course check out our website at taxaccountingadelaide.com. Thank you.